All right, first up, let's take a look at the Asian markets. They're higher after another volatile trading session on Wall Street, where the Dow had a swing of nearly 500 points. This is on account of continued uncertainties surrounding the US-China trade relations and the possibility of a government shutdown in Washington. However, shares of major Japanese and Korean automakers jumped today, and that is leading the Nikkei and the Kospi higher. And this following news reports that China is moving towards cutting tariffs on cars made in the US to 15%, and this compares with current 40%. So in Japan, shares of Mazda, Nissan and Toyota spiked in trade, while shares of Hyundai Motors and Kia Motors surged in the Korean markets. The SGX Nifty, however, indicates a muted start for our markets. Remember, yesterday we recovered a good 200-250 points from the lows on the Nifty, near 700-point recovery on the Sensex from the lows. However, it looks like from the start or at the start, we're likely to take a knock of about 20-25 points.
Okay, so that's what the SGX is indicating. But let's tell you what took place on Wall Street. US stocks closed lower, mostly after a volatile session, as investors weighed mounting political tension and renewed optimism over the US-China trade talks. The Dow ended 53 points lower after rising as much as 368 points, and it also fell around 200 points in an intraday session. So a lot of volatility in yesterday's markets trading in the US. S&P 500 ended marginally in the red. Nasdaq rose 0.16%. Stocks initially rose more than 1% amid signs that US-China trade relations could be improving. This is after President Trump tweeted that the administration was having very productive conversations with China. CNBC's Aditi Roy gets us a wrap of all what took place in the US.
A roller coaster day on Wall Street, the Dow finishing down 53 points. It had been up as much as 368 and down more than 200 points. The S&P finishing flat and the Nasdaq up 11. Wholesale prices rising unexpectedly last month. Economists expected the rate to come in unchanged, but the producer price index outperformed slightly, up 0.1% in November. Google CEO Sundar Pichai is just the latest Silicon Valley exec to take the congressional hot seat. Pichai testifying before the House Judiciary Committee, his first appearance before Congress. Lawmakers grilled him on privacy, data collection, and plans for a censored search engine in China. The headlines were not enough to scare investors, though, as shares of Google parent Alphabet traded higher today. And GE shares falling today to its lowest level since the financial crisis a decade ago. The stock briefly falling as low as $6.66, though it finished slightly off those levels. This a week after GE made its dividend cut official, cutting the payout to just a penny per share. The stock has fallen more than 61% this year. That's the action from the U.S. market. Back to you in Mumbai.
Okay, well, that's what took place in the US, but here's some expert opinion coming in for the road ahead in the US.
This is a market that does what it's always doing. It's finding the fair value, basically. And, you know, when things are calm and earnings growth is either stable or accelerating, and we kind of know where the Fed's going and the economy is stable, investors are generally willing to pay a higher PE for that market. You know, PE is really what this all comes down to. It's just a market that's trying to find its way, and you know, liquidity has become more scarce in recent weeks. There's more air pockets in terms of when someone's selling. There are fewer people stepping in the way to buy it. So I think that's also a reason why you're seeing exaggerated moves here. But ultimately, the market's trying to find its new equilibrium, and I think it's doing so.
I think the main issue that we're dealing with is a sentiment problem, not a fundamental problem. And when people look at equity markets, I think one of the mistakes that they make is they think, oh, the equities must be signaling something about the economy, but stocks aren't very good on the economy. You know, when you're investing in stocks, you're investing in future profits. And as a result, stocks end up becoming more tuned to a profit cycle versus an economic cycle. And they work at different speeds. So when looking at an economic cycle, I think it's important to look at credit markets. And what's been really unique about this pullback that started at the end of September is that it was equities that led credit lower. It's sort of like the tail wagging the dog. And that tells me it's more sentiment related rather than fundamental.
Most likely in the base case, markets trade up. And I think what we're trying to do, what markets are trying to do is to resolve two forces. One force that's pulling markets up is valuation. The forces that are pulling the market down, and that also pull down sentiment, are basically idiosyncratic as opposed to systemic risks. Trade policy, pro-cyclical fiscal policy, Federal Reserve policy. Across the pond, fiscal policy, Italy, France, residual risk of Brexit, and across in Asia, a Chinese slowdown, which is, given demographics, sort of inevitable.
All right, that was all that took place on Wall Street, but across the Atlantic in Europe, markets rallied on Tuesday as the US and China sought to push forward with the next stage of trade talks. Remember, the European markets ended closer to the higher end of yesterday's trading range, and that is when the Dow was also higher by almost 300 points. So, which is why we're seeing such a move on the European markets. How they trade today will be very important. The major indices ended with gains of over 1%. The German DAX outperforming. The sterling, however, hovers near 20-month lows as the overall sentiment remained fragile and amid deepening political turmoil over the UK government's proposed Brexit deal. So that is something that the street will be watching out for sure.
Okay, well, let's tell you about the currency space then. The dollar is hovering near 1-month highs against its peers, supported by a rebound in US yields as well as the weakness of the pound, which is battered by uncertainty about Brexit. So that's what's taking place currently in the currency market.
All right, the big news that came in last evening, the appointment of the RBI governor will be the top story. We told you first, and now it's official. Former Economic Affairs Secretary Shakti Kanta Das has been appointed as the 25th governor of the Reserve Bank of India, this for a period of 3 years. His appointment comes just a day after Urjit Patel's sudden exit from the Reserve Bank of India. Shakti Kanta Das, remember, served as the Economic Affairs Secretary from 2015 to 2017, and during that period, he worked closely with the central bank. Earlier, he had also served as the Revenue Secretary. Das, who is a 1980 batch IAS officer from Tamil Nadu cadre, played a key role in the government's GST push and the demonetization drive. He is currently a member of the Finance Commission and is also the government's representative at the Group of 20 summits.